Welcome, everyone. We're ready to get started on today's webinar. I'm Sarah Wheeler, Managing Editor of Content Solutions at HousingWire, and we're pleased to partner with Freddie Mac to bring you this webinar, Building the Future with Mortgage-Ready Borrowers. Today's presentation will offer a new perspective on the market and speak to future opportunities to make home possible. Increasing access to affordable and sustainable home ownership has long been a goal of U.S. housing policy. It's central to the Freddie Mac single-family mission and is championed by members of this audience. However, there are significant macroeconomic factors and localized affordability considerations, along with generational and demographic shifts that are changing the landscape for people to achieve the American dream. Freddie Mac recently launched All for Home, an expanded way of thinking about affordable lending and access to credit. They are committed to leading the future of home through insights, education, mortgage products, and business solutions, and are focused on prompting industry dialogue, providing subject matter expertise, and inspiring collaboration to solve some of our most significant affordability challenges. Not one company or role can do it all on their own. It will take the entire affordable ecosystem working together to make a significant impact. Our speaker today is Cindy Waldron, who is the Director of Research Analytics and Modeling in the Single-Family Affordable Lending and Access to Credit Division of Freddie Mac. Her responsibilities include researching and evolving needs of the affordable and underserved markets, providing leadership and coordination for regulatory goals and reporting, generating analytics to expand distribution and access to credit, working with sourcing to target and purchase underserved and goal-rich loans, and providing support to new affordable offerings, programs, and services. A veteran of over 20 years in the mortgage industry, Cindy joined Freddie Mac in 1999 and has held leadership roles within the single-family model and analytics and single-family affordable lending and access to credit areas. I do want to mention that we'll have a Q&A session toward the end of the webinar, and you can submit questions by clicking on the Q&A icon at the top of your screen. And with that, I'm going to hand it over to you, Cindy.
Thanks, Sarah. I'm excited to be here today to talk about some of the research that my team has been doing and how we're looking at opportunities while understanding and trying to help break down the barriers to home ownership. We're really looking at using data to be more strategic in sourcing our underserved markets. And today I want to kind of walk you through sort of the process that we've been doing that, looking at our whole ecosystem and the pipeline for new borrowers. So today's agenda is really looking at, first of all, what's the changing face of the borrower? And then who do we see as this mortgage ready? And I put it in quotes, and you'll find out why I do that. And then we kind of look at, well, what are some of their debt burdens? And then the affordability. Are people who we're considering this mortgage ready, are they living in areas that they can afford? And then we go into the next kind of a barrier or challenge is in the housing stock. Where they're living, is there enough housing stock for them? And last of all, one of the barriers that we are really seeing within our research is down payment. So we've kind of made it more tangible for people to understand, well, if they do not have any down payment, how long is it going to take them to actually save for down payment? So let's begin. The first thing we're looking at is, what is the changing face of the borrower? And so first of all, I wanted to sort of give a grounding of, well, what is the home ownership rate over the last few years? And so this is from the source is from the Joint Center, and so you see that the home ownership rate was growing into the housing crisis, and then it's been declining through about 2016, and it's slowly been coming up, and then we had a little bit a dip in 2019. So who are the borrowers of the future, or where do we see the growth coming from? Again, this is from U.S. Census, and so the first one that we want to look at is the white non-Hispanic. So if you look at the blue chart, or the chart, the first bar chart is blue, is 2015, the 2020 is the green, and then it goes all the way down to the purple and the projections for U.S. Census on what we think each of these race ethnicities, how they will grow over time. So the first one, the white non-Hispanic, we're actually seeing that population declining in the next few years. And then Hispanics is the next bar chart. And we see they're actually growing from what they are from 2015 that we have to the 2050. And in fact, Hispanics are the fastest growing population. The next population that we looked at is African Americans, and we see that population being fairly flat. And the next bar charts that you see are Asians. And you see that they are slowly growing, and between Hispanics and Asians, we see them as the two fastest growing populations. So here I have some individual demographics, but let me first step back and say, well, where are you getting this? So what the research that we've been doing most recently is that we went to a credit bureau and we got a random sample of all credit visibles in the United States. And we did that in 2016 at the end of the year, and then at the same time period in 2018. And so part of this is to really see, well, what has changed in those 2 years? And this slide is really just to ground us on, well, how are things changing? And you can see not too much. The first one is age, and that's really just people aged up. So not too much to learn there. The income, you see, it's fairly flat, and we didn't do any adjustment on that. So it's actually, if you think about it, got a little worse. So then we looked at all the different populations. We have non-Hispanic whites, African Americans, Hispanics, Asians, and we added in different age too. So we have young millennials, and we have that as 21 to 27. And that's as of September 2018. And then old millennials, 28 to 37, and then Gen X, 38 to 56, and seniors. So you can see the income, the seniors, not too surprising, went down slightly, and then each of the other populations slightly went up. But again, overall, we're not really seeing much of an income change. The FICO score, we did see 3 points difference. And so the one thing you'll notice as the younger population tends to be African Americans and Hispanics, so the FICO score are a little bit lower there, partially because they're younger, and then partially we are seeing within the African American community more ever 60, 90 hitting some of their FICO scores. And then the debt, we see the one thing that is very noticeable is the African American debt. So I want to note that these are the median debts, and so typically African Americans tend to not have as much reported debt like as in mortgage, and so that's where you're seeing the lower debt compared to the other demographics. So now let's get into, oops, sorry about that, the mortgage-ready perspective. So again, all the research that we're doing in the next few slides is really based on this credit bureau data. And while this did not go through any of our underwriting, so I want to make sure that's clear, this is more of an academic mortgage ready. So what we did here is to really kind of have, just for our all for home, we're kind of has a whole ecosystem. I'm kind of looking at the borrower of the future, or the borrower that we're looking at is, well, what is their ecosystem? How are we looking at that? And again, in the beginning, I sort of said, well, we're looking at what are their credits and their credit history. We're going to look at their debt, their geographic affordability, the housing supply, and their ability to pay. So the first is these mortgage ready. So if you look on the bottom left, you will see my definition of what I'm calling, in quotes, mortgage ready. So if you're thinking about it in almost in a marketing, well, who are my target market? And this is who I'm kind of looking at is who are my opportunity of mortgage ready? And so is their FICO score greater than 620? And the debt to income less than or equal to 25. Again, these are without a mortgage. And then do they have no foreclosures or bankruptcies in the last 84 months and no severe delinquencies within the past 12 months? So when we used that within our, again, credit visibles, we found the mortgage ready population was about 32%. And what we did is on the top, you see the different bubbles. We have the total population that equates to about 37 million. And then millennials, it's 24 million, Asians 4.3, Hispanics 7.8, and African Americans 2.9. And some of these can fit into multiple categories like millennials and Asians and stuff. So then the next step we wanted to look at is, well, they're mortgage ready, but what are some of the debt that they're actually incurring, and what are their burdens that they're having? So within the credit bureau data that we have, the first thing is, let's look at, of the mortgage ready, how is the debt as far as the UPB? What is their debt levels? And this one we have by race category. So we're hearing a lot about this in the news. So the student debt is the highest that we're seeing within the different categories. Actually, Hispanic, the auto is a bit higher than the student debt. Then the next is the auto. And then the green bar you see is other installments and then revolving trades. So while those are the highest UPBs, the next thing we wanted to be able to say was, well, how many actually have these different debt? And so that's what the next slide's about. So when you look at this graph, how to read it is, again, we still have from the top, we have non-Hispanic whites, then we have African Americans, Hispanics, and Asians. And each of the bar chart represents the percentage of debt that each of them each have of that debt, right? So let's read, for instance, African Americans. And so you'll see their largest debt is 75.9%, and that's with the revolving trades. And then we see that auto is the next at 36%, and then student debt is 24.2%, and we have the other installments at 10.9%. So the takeaway from this slide is revolving trades, which is like the credit cards and whatnot, is there high, like most people have that. So we're in the mid to high 70% that have that. The next is auto, and we go from Asians at 23.3 to all the way up to 36.1 for non-Hispanic whites. And then the next one is the student loans, and that can range from, Asians at 8.2 to around 24.2 for African Americans. So the next thing is you say, okay, well, here's how much they owe for the debt for UPB. Here's the percentage. Then the next is, well, how does this affect their day-to-day debt situation? So that's what the next slide's about. Slide 14 is really looking at, so each month, what are their bills? And so I think this one is really interesting because you see for each of the categories or each of the race ethnicities, the largest debt is actually auto. And then the next, so those are the dark blue. And the next one you see is actually other installments. And then the third one is student debt. And then it goes to revolving trade. So while most people have a revolving trade, it's the lowest what they have to actually pay for the monthly installments. Keep in mind, with the credit bureau data, this is really sort of what we see at the end of the month. We don't always know exactly what their credit bill is month to month. The one thing I wanted to bring out a little bit, because I get asked this a lot, is student loan debt. Keep in mind, student debt is actually an investment debt. It's not a consumption debt. So you're actually, typically your income should go up faster. When you're seeing these, while they had higher UPBs, they have longer amortization periods. So each month, you're not actually having to pay as much, and that's why you're seeing it as a lower amount in each individual's monthly payments, versus an auto has a shorter amortization period. That's why you're seeing a higher percentage. The other thing what I wanted to bring out for the debt situation here is that the credit bureaus do not get child care. It's something that we're looking at going forward because we're seeing a lot of millennials delaying having children. And so if you're in a high-cost area, 1 or 2 children in daycare could almost be as much as a mortgage payment. So more to come on that kind of research, but this is really looking at sort of what we can see in the credit bureau currently with their debt situation. So next is, well, if they have, how many have actually an auto and student loan? And so this is what you're seeing here. So the African Americans disproportionately have higher burden on both student loans, and auto. And then the non-Hispanic whites are second at the 10.5. The next slide that we have is how many have both auto and student loans based on age. So again, we have the older millennials is the highest disproportion having the burden for both auto and student, and then it's young millennials, and then finally Gen X. This isn't too surprising from the results that you would assume. So now that we've had a better understanding of what kind of debt they have, the next thing we want to be able to look at is, well, are these individuals who are mortgage ready, are they living in areas that they can afford? And so how are we looking at affordability? And so you'll see on the screen I have a map with different MSAs. The first thing to look at is the orange color. That's a heat map of where the share of the mortgage ready are living in each of those MSAs. So that's the first. And then the second one, we have bubbles on what is the percentage of the mortgage ready can afford to live in each of these MSAs. So let me go over how we calculated that. So this is to say we're using a NAR methodology where they said the quarterly gross income is it greater than or equal to the mortgage amount they pay for 1 year. So this time, and we've done it many different slices and dices, this one is based on a 10% down, 4% interest at a 30-year. We have done this with a 3% down also, and it's changed a little bit, but not too much because these are, again, mortgage ready, and so the percentages shouldn't change too much because the buckets are fairly big too. So what we also did, we looked at the average house price for a single family or condo in the medium house price at each county level based on Freddie Mac's home value estimator. So when you look at the map, the green is less than 35% could afford to live where they are currently. If you look at the purple, that's 35 to 70%. And then the blue means that greater than 70% could afford to live where they're at. And again, these are the mortgage-ready individuals. So I think that's a pretty powerful map when you look at it, because there is a lot of blue in the map, and you typically see it in the Midwest, more east, and the South. Not too surprising where the green are, where the high-cost areas. But still, there is still mortgage ready there and still opportunities that we can see. So that slide was all about everybody who's mortgage ready, but a lot of the things that we're really trying to do is use this methodology to target underserved segments. So the first one I wanted to look at was African American. So we do this methodology for multiple ones, and I'll show you Hispanic next. So this one, again, you read it the same way that we had for the previous slide. So we added, instead of percentage, we have absolute numbers. And so you see all the heat map, the darker the orange, the higher the population of African Americans. And then we have, again, it's the green is less than 50%. We have the purple, it's 50 to 75%. And the greater than 75% is the blue. And so, again, you see that a lot of the mortgage-ready African Americans tend to live in the South and then up that eastern corridor, and then even in the Midwest. So there's a lot of opportunities that we're seeing in that area. There's not as many of a high population in the West, and again, it tends to be less affordable for them. So the next one we have is Hispanics. So the one thing is, again, we read it the same way. The darker the orange, the higher the percentage or the absolute number, in this case, of Hispanics in the different MSAs. And we read it the same way of how many are mortgage ready. The green is less than 50, the purple is 50 to 75, and the blue is greater than 75%. So one of the takeaways that when you step back and look at this, the difference between even the African American, is that you're actually seeing the higher Hispanic population in more high-cost areas. So this is actually one of the challenges that we have in penetrating the Hispanic market is where they're living is not as affordable as, let's say, African Americans. So next, what we wanted to look at is, okay, you may be mortgage ready. You may or may not know it. You may you can afford where you're living, but is there something for you to purchase, right? And so this is what we are looking at next. So here's a methodology that we looked to say, on sort of an industry standard to look at, we got the data from Redfin to say if the inventory over sales, if that ratio is greater than 6, historically we've said, okay, there's probably adequate housing stock in that area. So here we have some of the larger MSAs to see what the housing stock is. And we look at this on a quarterly basis. And I will tell you this July 2019 is looking quite a bit better than we've seen in a bit. So you actually are seeing, so it's a heat map. Less than 2 is the ratio is where it's white. And then you keep getting kind of darker orange to more brownish maroon, and that is the darkest color is the greater than 6. And those are where we're seeing or saying that's probably adequate housing stock. So the last few quarters had a lot less of those darker colors, so we're actually seeing a little bit more housing stock, but I actually think a lot of this, given that it's July, is seasonal. And so that's where you're actually seeing a little bit better housing stock. I will say that this is all in. And so this is not just affordable housing stock. That's kind of our next deep dive, is to look at how much is the affordable housing stock versus all-in housing stock. The next thing we looked at, we've gotten a lot of good feedback on this, is the time to save. So one of the biggest challenges that we've seen in the barrier to home ownership is really how long it takes to put a down payment. So what we really wanted to do was make it tangible for the borrower of the future, or for this for the pipeline, is to realize, well, how long, based on where I live, would it take to save? So what you see in this chart is we broke it up by race, ethnicity, and then how long would it take for 20%, 5%, and 3% down based on where they live. And so based on their income, and again, this is from the mortgage ready population, we have the income. And then according to the Bureau of Economic Analysis, the average personal saving rate for the United States is 6.7. So we did that and took that rate. And so based on that, if you do the 20% down, if you're non-Hispanic white, it's 14.4 years. African Americans, it's 15.4, Hispanics, 24.5, and Asians, 23.5. I don't know about you guys, but that feels daunting. So that's why I think a lot of when the misperception of you need to put 20% down, you think about it, that's a long time to get home ownership. So let's go to some of the products that we've had to allow people to get mortgage ready into a home. We have a 5% down, and that already cuts it down for non-Hispanic whites. Oh, I'm not sure why, what happened here. I apologize. I do not think I no longer have the control, so I apologize. So let me keep, hopefully we can get back to it, but let me finish that slide and then I'll go on to this slide. But the next thing is the down payment was 5%, and the next thing we had was 3% down. So the 3% down for non-Hispanic whites, and I apologize that you can't see it, it's 2.2 years. African Americans are 2.3, and Hispanics 3.7, Asians 3.5. So at that point, you're seeing with only a 3% down, it goes from 2.2 for non-Hispanic whites to 3.7 for Hispanics. So this makes it a lot more attainable for the borrower to get. One of the things you may want to note is why is it that Hispanics and Asians have a higher time to save than other groups? One of the reasons is because Hispanics and Asians, as we just mentioned most recently, tend to live in more high-cost areas. So again, this is time to save where they live. So now, so we're actually on the right slide now. Again, I apologize for that hiccup. Not sure what happened there. So this is about, we have a map, and we looked at how much, so instead of looking at just the race ethnicity, this is all mortgage ready based on where they live. So it's, how to read it is, if you're a dark green, that would take less than a year to save for a 3% down payment. The lime green would be 1 to 2 years, yellow would be 2 to 3 years, orange would be 3 to 5 years, and the dark red would be more than 5 years. So I think this map is good news, right? So if you look at it, there is a lot of dark green and that lime green, which means less than 2 years for a lot of individuals, based on if they have the counseling and the discipline to save that percentage, they could have a down payment. Again, this assumes no other savings has been had. Another thing that you could look at to even reduce the time is the fact that you could add this to a down payment to get down payment assistance. So the next, and I apologize because I can't move it. So the next one we have is looking at African Americans and how long it takes for them to save. So this, okay, we got the African Americans, thank you. So the African Americans, you'll see, again, we have the MSAs, and how long would the African Americans, based on their income and where they're living, how long would it take them to save for the 3% down? And again, not too surprising, sort of where we had is where the African Americans lived, is more in that south and the eastern upper corridor. You see there's a lot of opportunities there where it would take them less than 2 years or less to be able to have a down payment. The challenging areas, of course, are in the West, but that's challenging for all the different race ethnicities. The next is the Hispanics. And so hopefully we'll be able to change that soon. Okay, and so now you'll see the map for Hispanics. And again, if you remember where I said the mortgage-ready Hispanics live, they tend to be in high-cost areas. So this is where it's very challenging for Hispanics because you'll see a lot of them are in, for instance, California, and you see where they're more than 5 years or the 3 to 5. So they are challenging. So a lot of the things that we are trying to work on is, can we get down payment assistance? Can we focus more on the Home Possible, Home One, to make sure that they're able to get into home ownership too? And so the next one is Asians. Oh, and there we go. And so for Asians, you see their again, this is where the Asians live and their income and how long it would take to save. And so you read the map the same way. Again, they tend to live in high-cost areas too, and so that's one of the challenges for Asians. But you do see a good amount that's in the Midwest and, again, the East, but there's, again, 2 years or less, and even the yellow is 2 to 3 years. So there's a lot of opportunities that we see there for Asians. So again, this is a methodology that we've been using to really walk through, to target and to better penetrate some of these markets. We really look at how is the borrower's debt situation? Are they living in areas that are affordable to them? Is there enough housing stock? And we're sharing a lot of this with particular, like with lenders and others in our ecosystem to help them better target their underserved areas and be able to better penetrate this market. So I know we wanted to take some time to ask for questions. So Sarah, I'm going to turn it back to you.
Great, thank you so much. That was really insightful and have lots of great information. Just let all attendees know you can still submit questions by clicking the Q&A icon at the top of your screen. But we've got plenty, so let's just dive in. So the first one here is, what are the best examples as to how best to prepare these mortgage-ready borrowers to become homeowners?
That's a great question, Sarah. So I think Freddie Mac has been very successful in educating and assisting an increased percentage of first-time home buyers, especially in diverse populations and millennials, to obtain home ownership. And it's not just obtaining it, but it's really maintaining it as well. And I'll kind of touch on that a little bit too. So this includes working with affordable housing ecosystem to educate potential home buyers at the community level and about financing options, right? So you asked for examples, so let me go into some of that. So first of all, I wanted to talk about Freddie Mac's Borrower Help Centers. We strategically have placed them in specific markets to better penetrate and serve minority and underserved markets. So they help counsel not just to obtain a mortgage, but really foreclosure too. So keeping people into the homes that they have. A second example I want to give is Credit Smart. So that's a curriculum that we have about home ownership and financial literacy curriculum. And it's free and it's online to aid in creating educational buyers and to educate buyers and homeowners. So we're even working with 2 behavioral economic professors to better to have borrowers make better decisions in this area. This Credit Smart is also in Espanol, and we're actually working on, and I think we have, is a military mode. Another example that I want to highlight too, as we're talking about the ecosystem of Freddie Mac, is that we really have strong partnerships that we really enforce and really work with a lot. And that is, one example is our real estate professionals that we work with. So we work with Narab, Aria, Namba, Nigel Rep, and countless others. We also have Home Team Advantage, and these are events series across the country to provide resources and offer community connections and education to move the needle in affordable housing. And last, I know it feels like this is a laundry list, but I do think we do a lot to help provide home ownership. But I would be amiss if I didn't mention research. And so we're really helping to understand who are these mortgage-ready individuals, and a lot of them actually don't know they're mortgage-ready. So really trying to create awareness around that, to create awareness about the down payment, that it's not 20%, it's 3%, and really have solutions such as Home Possible and Home One to help them get into home ownership.
Thank you. this next question has to do with, and I think, one of your slides, it was talking about down payments and how daunting that is. With down payments being a significant barrier for most first-time home buyers, what solutions are there to help?
So Freddie Mac has two low down payment products, and I think those are two of the things that I would kind of point to for the most is that it's a Home Possible, which is our affordable product, and this one is really targeted to low to moderate income borrowers who are 80% of the area median income or less. The other, because we really, based on our data, realized with the down payment how challenging it is, in particular in high-cost areas, to put more than a 3% down. So we just recently, as of last year, put Home One product. And this is really for our first-time home buyer. And it's to create and we're out there creating awareness for it. And it can be actually partnered with a lot of the other products that we have out there, like our new renovation products, for instance.
Great, thank you so much. This is kind of a forward-looking question. It says, we hear a lot about aging housing stock. What impact will that have as we look down the road?
That's a great question. Housing stock is one of the questions I'm asked very often. I know our chief economist talks a lot about it too, sort of where is the new housing stock coming? But the other thing is really thinking about what's the housing stock that's already there. And a lot of times that's not talked about as much. We talk about the new construction. I believe it was the American Community Survey had about 37 years was the median age of owner-occupied homes. We've actually done a lot of research on our own to say, well, where do we see these the age or the median age for each of the houses within the states? And where we found a lot of the aging house was really in the upper East Coast and in the Midwest and predominantly. And so one of the things we wanted to look at was to help housing stock was how do we take care of the housing stock that we currently have? And one way to maintain and increase this housing stock, as I just recently mentioned, was renovation. So we recently just launched our Choice Renovation product, which provides home buyers a flexible choice to purchase a home and refinance the cost of the renovations with a single-family mortgage, saving time and money. So who's a good target market for this is, so for instance, the older generations are wanting to age in place, but there's a lot of things that need to happen to maybe have the bedroom and the main floor, right? The other thing is to entice millennials. They want to have a contemporary home, right? So a lot of the housing that is older, they can go in there and renovate it, put a lot of new appliances and make it really clean and crisp. And that will open up housing stock for them and maintain and keep it at a good pace. I want to also talk about some other products that we have that can help with the housing stock. So a second one is Choice Home. And I'm a really big believer in manufactured housing. And this product is that you can have site-built financing for the manufactured house based on these different criteria. I think that will also help add to the shortage in housing stock. I feel another one is Green Choice. A lot of times there's housing that is not very energy efficient, and this Green Choice is really to allow upgrades in the energy efficiency space.
Thank you. That's very valuable information. What are some of the other topics that Freddie Mac is conducting research and analysis on? And here's a question: where can I learn more?
That's great. I actually have on my last slide places that people can, if we can move to the last slide, because that will help in being able to talk through it. So at a high level, I put some places because I anticipated somebody would ask something like this. And so The first is really looking at our more macro housing and research that we have out there. And so there's a link to that. We have our executive perspectives, and there's a link to that. And then where you could find a lot of our work is in the Affordable Lending Insights. This is a new website, and so we're still working out, building out content. And so I would advise you to come back for more. We are putting out a lot of different research and putting it in that space too. And then finally, I wanted to advertise. We are hosting a Rural Research Symposium on November 5th here in Washington, and I provided a link that you can sign up for. One of the segments or the underserved areas that we're really doing a lot of research is in the rural area. We're looking at appraisal challenges and credit and financing challenges, and really looking at what is the rural rental market. So please look at that and sign up. And then I wanted to talk a little bit more into the micro of what are some of the research that we're doing and what does my team do. So my team really focuses on research that is data-driven to help understand and solve barriers to home ownership. We work on targeting and influencing the borrower of the future and gaining knowledge for these underserved segments. Our goal and our mission is really to provide actionable analytics and expertise to support our community mission. So let me give you a few examples of what I mean by that. So a lot of the research that I showed over today was very high level. We're going into a lot of more detail. One of the places that we presented it at one of the MBA meetings, right? So we had this, and they worked on African Americans, and it helped them to better figure out where to target these borrowers and where they should be holding events. Another example is that we're presenting a lot of work to lenders. I mentioned this before, but a lot of lenders are coming to us and wondering, how do I target certain underserved areas, or how do I think about millennials or other segments? And so we're using a lot of our data to really help draw and source different opportunities. Another thing that we're looking at is energy efficiency. We have a paper, it's part of our regulatory duty to serve that we said that we would work on, is looking at energy efficiency as to their house prices, how is that impacting that, and in performance. So we have a paper coming out in the fourth quarter, and we're working with the credit team to better understand how this research could potentially impact different policies that we have. Another example is we were published in Cityscape's July issue for research on counseling and rural to better understand the challenges and the efficacy to help drive change in that space. And lastly, again, I wanted to talk about, again, with the research symposium, a lot of the research that we've been doing is on manufactured housing. And I mentioned before, I'm a big fan of having manufactured housing as helping a supply solution. And so one of the things that we're really focusing is manufactured housing, title as personal property and real estate. We have surveys out to borrowers for both, and we will share some of the results at the Rural Research Symposium. So I know that's a lot of stuff that we've been mentioning, but please go back, like I said, to the Freddie Mac Affordable Lending Insights. We're putting some of those papers there. We will continue to post our research in that space. And again, I encourage you to, sign up for the Rural Research Symposium to be able to understand some of the challenges and the uniqueness of that segment.
Thank you so much, Cindy. You really gave us so much great information and resources there, and I know that's going to be extremely helpful. Just a few housekeeping items. If you submitted a question that Cindy didn't have time to answer, Freddie Mac will contact you directly to answer the question. And HousingWire will be sending out the webinar recording to all registrants within 48 hours. The webinar will also be available in our Knowledge Center, along with other webinars and white papers, which can be found at knowledge.housingwire.com. I want to say thank you to Cindy and to all of our attendees, and I hope you have a great day.